the strategy you're about to learn. So first things first, let's go up here to whiteboard and I will break down the entire strategy for you. So for starters, we're looking at swing highs and lows. If a market is doing this, these new lows from our previous low to our new low, that is a swing low. These new highs, we go from a previous high to a lower high. Those are swing highs. We're looking at these swing highs and lows, and this is normally what a downtrend would look like. What we're waiting for is price to push up and break through the previous swing high. That is our first component of this very simple strategy. We then want to see price pull back to that previous swing high. This being our first component, our second component is actually this combining with a moving average. So this is going to be the 200 EMA, and what this does is it combines, it stacks up two different areas of value. The first area of value being the previous resistance level price just broke, telling us that price is likely to reverse and start heading up from our previous downtrend. The second area of value being the 200 EMA. As price comes down to the 200 EMA, we want price to at least touch our area of value and at least touch the 200 EMA. Then our third component is some type of candlestick pattern. For this example today and what I used on the Aussie yen trade, we're going to use hammers and shooting stars. At this point, we have stacked up two areas of value and a candlestick pattern all coming together to prove that we have a higher likelihood of price continuing up at this exact moment than it continuing down. And if you add that to a good reward to risk ratio, you come away with profits over a long period of time. So let's really quickly go over a bearish version of this. Then we'll go down to some real charts, check out the Aussie yen trade, and I'll break that entire trade down using this exact strategy. For a bearish version of this strategy, we would see price going up this time, making new swing highs and lows higher than the previous swing highs and lows. And then we would want to see our first component for a bearish trade is a break of the previous swing low. After that break of the previous swing low, we would want to see price pull back to that previous swing low. We would want that to combine with what? A 200 EMA, which I'll show you how to put on the chart in case you don't know momentarily. After we combine our 200 EMA area of value with the previous level of structure support that was broken and now should become resistance if markets are trading in a technical way. What are we looking for after that? After that, we'd be looking for, in this case, an upside down hammer, a shooting star, a candle with a long wick to the top side. Does not matter what you call it. All of them mean the same thing. They all mean selling pressure. And selling pressure in combination with the other factors we have, like price at a previous support that should become resistance, like price at the 200 EMA, mean that we have a higher likelihood of price continuing lower and hopefully hitting our profits if we're going short. So now that I broke down this strategy on a whiteboard in a really quick and broad way, let's go ahead now and take a look at some real charts and discuss how you can use this strategy to start making profits in your own trading account. Here's our first example on the Aussie yen. Let's break it down. So the first thing we need to see is price starting to trend in the downward direction. I'll draw out our swing highs and lows. We go from swing high to swing low, back up to lower high, down to lower low, up to lower high, down to lower low. We continue this process of lower highs, lower lows, lower highs, lower lows, until eventually what happens? Eventually, this happens. We reverse. This is our first sign that price wants to start heading higher at any point. When we see lower high, lower high, lower high, lower high, lower high in combination, and after that, we see one of those lower highs broken, that is our initial sign that price could possibly be reversing. For this strategy, one of the things we're looking at is that previous swing high that was just broken because it can act as a major level of support. So if I do this and we draw a box on, because these areas are going to be zones and not necessarily a line on the chart, you can see that price, after breaking above that swing high zone, did in fact pull back into it. Now, what's the other thing we have to see? We want to see a combination of confluence from a technical analysis standpoint. Trading this on its own, just the break of this previous high, can be profitable, but not nearly as profitable as if you combine this with another area of value. The 200 EMA is a major area of value. So now that we've seen our first rule met, we need to see price at least touch the second area of value, which is the 200 EMA. Do we get that here? Of course we do. We can see this wick of the candle come down and hit our 200 EMA. Therefore, the first two rules we have for this strategy are met. If we zoom in a little bit closer here, you can also see that the exact candle that touches the EMA, in fact, is considered a hammer candle or a long wick candle to the downside. Whatever you want to call this is irrelevant. This is just an indication. All of this wick followed by buyers eating that wick up and closing up towards the top of this candle, that is just a sign of buying pressure. And when we combine that buying pressure with our area of value confluence, we get a really high likelihood of having a really nice trade. Now, let me mention this to avoid giving anyone some kind of false hope. This trade was a very good trade, fantastic trade, by far my best trade of 2022, hitting an 11.4 to 1 reward to risk ratio, 11.5, whatever it is. But this is not a typical trade using this strategy or any strategy. There's not a strategy out there that just wins all the time at some huge reward to risk ratio. What most beginners tend to think is that that is the case. Most beginners tend to think that if you are a winning or a professional and a profitable trader, that means you don't lose. That means you just make money. You make trades like this all the time. Guys, I'm going to tell you that's not the case whatsoever. I have